everyone, and welcome to our YouTube channel, Moneyline with Nancy at TV. In case you're not a subscriber yet, please do subscribe. Just press the subscribe button as well as turn on the notification bell so that you can get notifications when we upload our videos. Don't also forget to subscribe and join, follow, like our other social media platforms. Of course, you're seeing it right about now. Don't also forget to share this video across your platforms. Enjoy the video. Tosin Osunkoya, the Chief Executive Officer at Comercio Partners Asset Management, joins me now. Hello, Tosin. Happy New Year, even though it's coming.
Good to see you.
Should I say it's coming late? We've not spoken this year now. The last time we spoke was in December.
Absolutely, it was in December.
Yes. How are you, my friend?
I'm fine, and you?
I'm
I
fine.
can see you've been busy this morning.
I've been busy. I've been really busy. But let's go to your report. Quite an interesting read, though, Tosin. Really interesting.
Thank you very much.
Yeah, very interesting. I like the way you guys broke it down. Equities market, Euro bonds, the US, you dwelled on the US, on China. You know, it was quite an interesting read, at least on my mobile device, 150 pages. So I think I will start by asking you, of course, you gave your own summary. You are three partners, by the way, you know.
Yeah, absolutely. Namdi Wizu, Steve Oshaw, and myself.
Yes. Let me not say I was partial. I read the three of you, but since you are the one coming on air, and I think we should get your other two colleagues on the show soon. You know, let it not be as if Nancy is partial to only Tosin, you know. So let's talk about why you guys think that 2025 is such a pivotal year. Because that's what you put in your report. It's such a pivotal year. Why?
Yeah, 2025 clearly is a pivotal year in the sense that at the global stage, Trump is coming in now. And honestly, I think that he needs to watch his utterances. I hope I'm not going to be in trouble. But we believe that in fact, he has started shaking the entire world, all right? Starting from, tariffs, which is trade wars, and also trying to resolve conflicts between, Ukraine and Russia. And we think that that would also impact on inflation globally. So this year is certainly a pivotal year, and that's at the broader level. Coming to Nigeria as well, I'm sure that you're beginning to see that the dividends of measures taken by the central bank, we are beginning to see it. Yes, you might say that it is still early days. I believe it's still early days, but we believe that Nigerians will begin to enjoy some sort of respite going into this year. So this year, Nancy, is a very critical year. I think that if you are well positioned, you could have a lot of savings from costs and savings also from some of the projects that some manufacturers have embarked upon. But investors would smile at the end of this year. So that's why for us, we think that this year portends a lot of opportunities.
Investors where? Are you talking about investors generally, or investors in the equities markets, investors in the bond space? Where, fixed income markets, where exactly?
So if you want to look at the global space, maybe in the US market, we think that US market would create massive opportunities for investors, from Eurobond into US Treasuries, because US Treasuries are beginning to ease. So if you're long on US Treasuries, you would see some monies to be made from that. also in the US market. The corporate US world, I think, is very resilient because we believe that President Trump is pro corporate, expansion and dominance. So we expect that in the US market, we would see massive opportunities there. Coming to Nigerian environment. So what has happened is the measures taken by the central bank has given or has restored some level of confidence, particularly to foreign investors. I'm sure that you've seen how there's been some convergence between, the official window and the parallel window. And I think that we will see some level of stability with that. We are also beginning to see a lot of foreign investors showing interest again after so many years in the Nigeria debt capital market and of course in the equities market. Right now, federal government bonds that was proud to now trading around 22% is beginning to ease. And that's on the back of some foreign investors showing interest in Nigeria. The reason why they would come in to do carry trade here in Nigeria is because they believe that liquidity is no longer a problem. They also believe that stability, they're beginning to see some level of stability in the FX market. They're beginning to see some level of transparency. Like the director of Monetary Policy Department earlier on mentioned that, the B-Match system that was introduced by the central bank had created some level of credibility and transparency. And that's what investors want to see. Investors, both locally and foreign investors, they don't like uncertainty. They don't like shaking the table. What they want to see is some level of certainty, which again, you might argue that it is not a promise, but they can plan with it and some level of stability. So for me, I think that we need to applaud the central bank's leadership for what they've done so far. And right now, we might begin to plan on the back of that. And with the rebasing that they've done, now year on year, we can begin to see what inflation, in Nigeria is. I mean, that is long overdue. They should have done that. The last time they did it was in 2009. So if you're saying to us that you have a 24% increase year on year, the entire public would like to see what it is in the next month. If you are able to moderate inflation going into subsequent years, then we would begin to applaud, the monetary policy authorities rather for what they've done. But Nancy, it is not just a battle to be won by the monetary policy or the monetary authorities. The fiscal authorities, they need to come to the table as well. I think that they need to build on the back of what the monetary authorities have done. And what do I mean by that? So if you've reined in inflation, in subsequent months, I think the federal government will now begin to address the fiscal issues, the infrastructure issues in Nigeria. If you look at the breakdown of what had contributed to, elevated inflation in this country, it's largely energy cost, food cost, housing cost, what else? Transportation
Transport.
cost.
Yeah.
Yeah. So federal government, they have the responsibility to build on the little winnings that we have. Because if we do not do that, perhaps this level might not be sustainable.
And there was a chapter in your Outlook which talked about this cost, and I'm trying to see if I can get it. But I remember you guys mentioned fuel, currency, and I think FX in terms of what has driven inflation so far. If we take a look at the 2024 headwinds that we suffered, of course, the localized impact of recent reforms, do you think that 2025 we still have the remnants of those recent reforms that we've seen, which the federal government has said that is yielding fruit? The Central Bank of Nigeria has said also that is yielding fruit, because Olayemi Cardoso has even been of the opinion that the FX subsidies were even more than the petrol subsidies, which distorted at the market, which no one was talking about. So how do you see that playing out? And I think the next question I have for you is that this year 2025, do you see the foreign exchange market efficiency? Do you see efficiency in that market moving forward? Of course, a lot of interventions coming up. But why I'm asking this question is also situated on the global
Yeah,
headwinds which we're seeing, as well as even,
absolutely.
the adjustment and realignment that we may see in global markets moving forward.
All right, so let me address the first one that speaks to reforms that, whether it's from the fiscal authorities or from the monetary authorities. I think those reforms would not bring dividends almost immediately, but we will begin to see, and we've actually started experiencing some growth in that area. So production coming from Dangote refinery in my view, I think would bode well for us. And that would help us to curb the demand for importation of fuel into this country. And again, the demand for FX to do that would significantly wane. That's number one. And there are other measures that both authorities they've embarked upon, and I strongly believe in what they've put forward, that in the next few months we begin to see some dividends from those measures and those reforms. Then secondly, talking about the FX market efficiency, like I mentioned, the B-March system that was introduced is one part of the central bank's body language that they want to deal with the irregularities and inefficiency in the FX market. And I think that they've dealt with it. We would see more benefits coming out of it. In my view,
Tosi, can I just put this in? Because I know those policies they've come out with in the FX market. I'm just saying, will those policies, will they be able to withstand if situations arise, that would distort the naira, perhaps even in the oil market, for example? That if we are not able to meet our production quota, for example, there would be pressure on the naira, which the director, MPD, did allude to earlier on. So will these initiatives still be able to withstand any situation that arises globally?
So those initiatives, they cannot be in isolation of other considerations that you've mentioned, especially with, measures coming from other countries, okay? Trump had said that, I don't know if you listened to one of his speeches, said, we're going to pump oil, that we're going to be drilling oil.
Yes.
He said, drill oil, baby,
yes,
drill
oil. I listened
and I
to
was
it.
like, wow.
That's part of why I'm asking this question.
And I was
Yes.
like, that coming from the president of the
Yes.
biggest country in the world, that means they will drill
Yes.
oil. And if you look at their strategic inventories, it's actually ramping up. So that would affect us in terms of prices, okay? However, in terms of production, so we need to do something about it. I'm happy that some of our indigenous, oil and gas operators are beginning to buy some assets off the foreign guys. So maybe some investment will be coming into that space. If investment come into that space, what would happen is that our production capacity might actually hit 2 million barrels or even more than 2 million barrels. So even if you're losing on the price, but you are able to compensate for that loss in price or price coming down and compensate for that with your increased production, perhaps Nigeria would be better off. Right now with 39 billion, reserves, and from market intel, a lot of the swap transactions that were done have been paid off, and central bank actually has enough FX liquidity to meet demand, which I also believe is responsible for restoration of confidence to the foreign investors, and for them to come in droves, bringing in their money and investing in fixed income markets. Maybe for this year, I see us continue in this, in this line for the rest of the year. If you were going to ask me that to say, okay, what do you see happening with regards to stability of FX? I think FX might actually stay at this region, perhaps even move lower to 1,400 or 1,300. But what central bank is clearly interested in is the stability of the price. When it doesn't matter where that price is, it could be 1.5 or 1.3
So
or
it's not about
1.4.
value, it's about
If
stability.
it is stable, that's the core, that's the critical word. If it is stable foreign investors and local investors can plan towards that. That's number one. Number two, speculative activities are completely taken out. I mean, 2024, you and I, we experienced 1,700, 1,800, and some people on the back of that were front running the country and the central bank, hoping that it's going to get to 2,000. For those people that tried that and lost their money, they will not try it again. So what has happened now is the restoration of confidence. Secondly, the local investors who probably thought that, oh, Naira was going out of the way to 2000, and perhaps there is depletion of their investment. Because when you have your investment in Naira and Naira is depreciating, an investor will say to himself that, oh, my money has been eroded by X amount. When you begin to see the level of stability now, you are perhaps confident that, oh, my capital is preserved. What is happening now is, in dollar terms, you are earning lower yield, but in Naira terms, federal government or central bank is paying you, double digits. We might begin to see a switch from dollars to Naira. Why? Because there's stability in the land. So that again is what I think would play out before the end of the year.
Okay.
But by and large, I think that stability is very essential for all of us in this country.
Okay, just before we go, we have about 4 minutes to the end. I would like you to speak on, you mentioned in your report that the tax revenue seems to be a silver lining, in your own words. Why do you think so? Then finally, how do investors position themselves? Because you're the chief executive officer of the asset management arm of your organization. How should investors position themselves, those listening to us right now, and have some kind of disposable income? Where should they put their monies this year? And one word for the year. Yeah, one word. So 3 minutes,
Okay,
then we go.
okay, quickly for the first one,
Yes.
I think that we've seen that tax generation, which is very significant to any country, not just Nigeria, has ramped up slightly in Nigeria, and the nets for tax administration has also widened. So what that means is that we begin to see more administration and penetration into tax system in Nigeria. And I think that would bode well for us. I'm expecting to see this year about 10% to 20% increase in tax generation, this year. That's on tax generation, and that's very critical to us. So if you're experiencing crude oil receipts coming in by way of increased production, then tax also must complement that for us to have a good level of revenue in our budget. For this year, I think that fixed income market will continue to play out well. For those who would like to diversify their portfolio, stay a bit in FX, they need to look at bonds. US market portends large, massive opportunity. If you have professionals that can help you tap into the benefits of the US market, particularly with AI and tech companies coming up, I think that that's one area that you can make massive money from. Locally, local equities, I think that you look at the banking sector, you look at industrials as well. I think oil and gas settling because there's some investment coming into oil and gas. But if you want to play it safe, I think that you should stay with fixed income. Fixed income can still give you some decent return with minimal risk.
One word for the year. One word, not one
God bless
sentence.
Nigeria. One word. You can't
That's
give
a
one word.
sentence.
Let me just say one statement. One
Yes.
statement. Just like the US, they say God bless
God bless
America. I
America.
think it's about time we should start saying God bless Nigeria.
God bless Nigeria. Okay. Let me not put you in a difficult position since you're giving me one statement. God bless Nigeria. And who would not want blessings? Because the blessings will entail a lot of things. Economic stability, no hardship, a lot of things. So God bless Nigeria. Thank you very much,
God bless
Tosin.
Nigeria. All
Thank
right. Thanks, Nancy.
Thank you.
Enjoy the rest of your day.
You too,
Bye.
you too. All right. I've been speaking with Tosin Osunkoya, who is the Chief Executive Officer at Comercio Partners Asset Management. And that's it on today's edition of the program. Thank you all for joining us as always. Be the best you can be and be the change that you want to see. I'll see you all again next time. Thank you for making it up to this minute watching the video. Thank you all. Don't forget to subscribe to our YouTube channel, Moneyline with Nancy, TV. Like, follow all our other social media platforms where we keep you up to speed with fantastic interviews, as well as markets, personal finance, business, and economy information. This is the best place to be. I'll see you all again in the next video.